For more on the hyperscaler debt explosion, let's bring in BondCliq's CEO Chris White. And by explosion, we mean just the amount of issuance, not that anything bad has happened. Chris, great to have you with us. Just wanted to be clear on that. How do you interpret the widening spreads that we've seen recently? Is it fears about how this money is being spent, fears about the companies themselves, or is it the anticipation that there's going to be so much more supply hitting the market?
Well, first of all, I think it's building into a broader trend. We're seeing global bond issuance breaking all records previously seen before. I think we're approaching the $6 trillion number for global bond issuance. So this is really in keeping with the trend for 2025. However, I think the widening spreads, this is the rare opportunity where investors are getting a really good deal. As one of your commentators said before, the balance sheets of these companies that are issuing debt is pristine, but they're having to offer debt at higher yields because there's so much supply coming to the market at the same time. So I look at this as actually a really good thing for investors. The other thing, a lot of times we were seeing tech companies raise money to buy back their equity in the marketplace, but this is really tech companies using their money to actually the next arms race around AI, which I think for lenders is something that they're feeling pretty positive about because there is so much optimism around the space.
Bond market has been resilient as can be. I would have thought with the government shutdown now at record amount in terms of duration, there would have been some hiccup. Are you seeing anything around the edges in the bond market that's concerning?
Not really. I mean, you would normally see a contagion start to happen in high yield markets if you're going to see markets break down. But we've seen record high yield deals as well. And they're also, associated with this sort of quest for power and more sort of data services. We just saw a deal brought to market by Morgan Stanley. It was oversubscribed by about 4 times, where they're bringing a $3 billion high yield deal to market for a cryptocurrency firm. So we're just seeing a lot of strength in the bond market. There's a lot of cash on the sidelines that's coming in. And I think really what it has to do is maybe as rates are being cut, people fear that they won't get this yield opportunity, so they're jumping in on these deals, especially for the investment grade deals for tech companies, which obviously, have balance sheets with cash on them and a lot of optimism around their future.
Chris, it's Karen. Thanks for being on. Let me just play devil's advocate a little bit, and I am a Meta holder. So Meta, which used to have an absolutely pristine balance sheet, tons of cash, is now a net debtor. So I know the profile of these companies is great, and they can turn on the cash flow when they want if they were turned off the CapEx, but that doesn't seem to be the strategy right now. So do you think so you don't think they're going to have to pay more if they do further issuances?
No, they will, but I don't think that it's as dire as them having to pay more because people are running away from the credit. I mean, what we've seen from Meta is what they've issued in the last 90 days is about 40% of their total outstanding debt to date. So they've certainly been super aggressive, and I think they need to be mindful of what future market conditions will be. But like digging into, for example, Google's issued more than half of their outstanding debt in the past 90 days, but they don't really have any debt coming due until about the 5 to 7 year maturity period. So they do have some time to get their act together. I think what a lot of people are doing are just making a bet that the AI is going to be a boom, but you're obviously going to have the infrastructure in place and obviously the power to drive. So this is something where I think they're investing in the future. And if you're a Meta stockholder, you might see some gyrations. But if you're a Meta debt holder, I couldn't pay off its debt is something that would indicate a much bigger problem than Meta maybe just overborrowing in the short term.